Today we are going to discuss the essay type questions of chapter number 1, the course ACCT 101. So the first question is the theoretical question, which is explain the following principles of accounting. In the first chapter you are given the 4 principles, so I have taken only the 2 just to give you the example how the questions can be framed. So you may be asked some principles of accounting to explain or to describe. The principle 1 is measurement principle, the second principle is full disclosure principle. So you have to explain them. Measurement principle, I have given the 2 points of each, and to make it very simple in the point wise, if you learn it, it will be very easy to learn and to write. Measurement principle is also called cost principle. So this is one point, okay. The second is that what happens in this principle. According to this principle, the recording is done on the actual cost. So these are the 2 main points that if you can write them, so it will be enough. It is based upon the actual cost, yani when you make the recording of the transactions, you will use always the actual cost, and this is also called the cost principle. The second principle is full disclosure. Full disclosure means according to this principle, all the relevant information must be disclosed. So every information of the business is to be shown in the financial statement. If it is not possible to show in the financial statement, it must be shown as a note. So that's it. Even if you write one sentence clearly, it will be enough. So in this way, the 2 principles or 3 principles may be given to you to write in the exam. The other question is about the assumptions. You are also given the 4 assumptions of accounting. So I have taken the 2. The 2 assumptions, monetary unit assumption and business entity assumptions. For example, you are asked to explain them. So first of all, for monetary unit assumption, you will write that according to this assumption, all the transactions must be recorded in monetary unit. Every country has its monetary unit. So here, like in Saudi Arabia, we have SAR. In the United States, we have the USD. So you should write that all the transactions must be recorded in monetary unit. For example, SAR in Saudi Arabia, USD in the United States. The second assumption is business entity assumption. This assumption says that the business owner and the business organization are the 2 different entities. Both are not the same. Owner and the business are the 2 different entities. You cannot mix them. When you make the accounting, it is not for the owner but for the business. So that's why all the amount invested by the owner is actually the internal liability of the business. So you just write it that the owner and the business are separate entities, and accounting is done for the business, not for the owner. That's enough. So in this way, I have explained the 2 theory questions. Then we have very important question. It is usually asked in the exam that what are the 4 financial statements. I have told you even many times in your face-to-face class that, or in the virtual class, that you may be asked the 4 financial statements. So you should know and learn the 4 financial statement and their names. The first one is income statement, the second is statement of retained earnings, the third is balance sheet, and the fourth is statement of cash flows. So these should be learnt in the same order, 1, 2, 3, 4. You cannot change the order. The spelling should be correct. So for income statement, you have to explain, you will write at least 1 or 2 sentences. 2 sentences in the short is enough. Income statement is a statement that records revenues and expenses. So this is one point you can write. Very simple, that revenues and expenses are recorded in the income statement. Secondly, what happens after recording? After recording revenues and expenses, you will get either net profit or net loss. If your revenue is greater than expenses, so you will be having the net profit. Okay. And on the other hand, if your expenses are greater than revenue, then there will be net loss. Okay. So in this way, net loss. So either you can have net profit or net loss of the business, and this you can find only through the income statement. Statement of retained earnings is the second statement, and this statement shows the opening and ending balance of the retained earnings. So whatever you get net profit or net loss from the income statement will be moved to the second statement, which is statement of retained earnings. From the retained earnings, we get the ending balance, and then this ending balance will go to the equity section of the balance sheet. So the third statement comes the balance sheet. Balance sheet is statement which records all the assets, liabilities and equity. You have seen in the accounting equation that assets is equal to liabilities plus equity. So this equation is truly found in the balance sheet. And balance sheet is also known as the statement of financial position because it shows the financial position of the business. So you can write the two sentences very simple, that it records all the assets, liabilities and equity of the business, and you should write one more sentence that it shows the financial position of the business. The last one is the statement of cash flows. It is very simple statement. It shows only the inflows and outflows of cash, yani from where the cash comes in and where does the cash goes out. So in and out, yani inflow and outflow of cash is shown in the cash flow statement. So in this way, your complete question will be here about the four financial statements. Now we'll take the two numerical questions. Question number 4, that prepare an accounting equation on the basis of the following transactions. I have taken here the 3 transactions. There can be 4 or 5 transactions as well. I have taken 3 transactions because of the lack of space to fit in the one slide. I will show you started business by investing by issuing common stock of 50,000. So it means the company has started and this start of the business is by issuing the common stock. So now I will do it here how to make the solution. You have to make the accounting equation. For that you write the assets on the top, okay, then is equal to liabilities, then you have the plus equity, okay. These are the major head. Under each of the major head you will have the various items, okay. So the first will take, the first item is business it started by investing into the common stock. So common stock is another item that we'll write in the equity section, okay, by investing 50,000. So in this way the cash will come in. The one item is cash which comes under assets, so I'll write one item as cash, okay. So cash and common stock are the two items that we have found from the first transaction. In the first case, when you are issuing the common stock and getting the cash, it means cash is coming in, yani increase in cash. So whatever you are getting, this will be increasing the cash 50,000, and at the same time it will increasing the common stock under the equity section. So in this way the first transaction is done. The second is purchase supplies on credit. So supply is one item, supplies comes under the assets, okay. So I will write here, and if you are purchasing it, so on purchase your accounts payable will be another item. So under the liability, account payable comes under the liability, okay. So your supplies you are purchasing, supply will increase 7,000. At the same time, because you are purchasing on credit, yani you are not paying now, so this amount will increase your liability, 7,000 your liability will increase. This is done for the second item, okay. For the third item, sold supplies costing 2,000 for the sales value of 2,500. So it means supplies is one item, and the second item is the selling on credit, yani account receivable. This is the second item, and you are selling the goods of supplies of 2,000 for 2,500, yani there is a gain of 500. So here the third item is gain, yani revenue. Gain will come under the revenue. So under the supply, your supply will move on, it will go out. So in supplies 2,000 will be minus, okay. And your account receivable is increasing. Account receivable is an item of the assets, so it will come under the assets. Account receivable increase by 2,500, okay. And 500 is a gain which comes under the revenue, so I will make an item of the revenue under the equity, okay. So under the revenue I will plus 500. After that I will make the balance of all, and we should check whether it is equal or not. So 50,000 we get in the cash column. Okay, then 7 minus 2 yani 5,000 here under the supplies, then 2,500. Okay, make the total of the three. We get 50 plus 5 plus 2,500 yani under the liability we have 7,000. Okay, then we have 50,000, then we have 500. So you will see here that 57,500 comes to the left side and right side also 57,500. That's all about the first question. In this way you can solve the accounting equation. Let us take one more question which is the same type of question, yani prepare the accounting equation. The language may be a little different, but you have to do the same thing. With the help of transaction analysis, show the transactions through accounting equation of Ibrahim company. Here we have taken the 4 transactions. So let us begin solution. Accounting equation: started business by borrowing from bank. So write the major heads. First of all, assets is equal to liabilities, then plus equity. Okay, first item is started by borrowing. So here one in this we have the two item, cash, and if you are borrowing it will be note payable. So cash is an item of asset. We go to the asset and write cash, and under the liabilities we write the accounts payable and notes payable. We write the two item. Actually note payable is needed here. So cash will increase because you are borrowing. So cash will come in 90,000. Cash will increase and 90,000 notes payable will increase because it is borrowing. The second item is salaries of employees due but not paid. So salaries is an expense. So come to the equity, write the item as one item as expense. Okay, and it is not paid. It means the cash will not go out. So it has no relation with cash. So in this case, what will happen? Your liability will increase, and this liability will be called as outstanding expenses. So I can make here one more item of the outstanding expenses under the liability. So your expenses are increasing, and at the same time your liability is increasing. Expenses of 1,500 increasing, but here expense will actually, what will happen? Expense will reduce the equity, so I will make the expense as negative, 1,500 negative, and the outstanding salary, yani its liability is increasing, so 1,500 your liability will increase. 1,500 is negative under the expense and 1,500 is positive under the outstanding expenses. The third is rental revenue received. So revenue is clearly revenue, and rent you are receiving, so it will be cash. So revenue, I will make one more column here under the equity for revenue. Okay, so cash is increased, go to the cash, 3,000. Okay, and revenue increased 3,000. The fourth item is consulting service revenue is due but not received. Due but not received. Okay, so it is revenue, of course, come to the revenue and increase revenue, but this revenue is not received. So when the revenue is not received, that is called accrued revenue. So I will write here accrued revenue under the assets, and accrued revenue is the assets. Under the accrued revenue, 4,000 will increase. Okay, so now all the transactions are done. I will make the balance of all. So here 93,000 for cash, accrued revenue is 4,000. Okay, so total become 97,000. Come to the right side, under the liability we have 90,000 plus 1,500. Okay, then minus expenses is minus 1,500, and then plus 7,000. So if you make the total of the left and right side, total 97, and right side also it will be 97,000. So in this way this happens, and you have found the final accounting equation. That's all about this. If you like this video and it is helpful, please make a like button and subscribe it for more videos. I'll be making it inshallah. Till then, good luck. Bye bye.